Hi everybody, it's been a while since I've done a video analysis and setups on my channel. I'm gonna go over a setup I've been following in gold futures, December contract since August 18th. As we all know, the gold was rallying in a very strong up move. This is a weekly chart of gold, and we were heading to extreme levels. So I was looking for a possible pullback, and one of the high probability reversals is setups I use is a CCI divergence, and I'm going to go over a lot of some of the posts I did in real time I tweeted in my account, on my Twitter account, and I'll show you how I came up with these levels and these numbers. So first thing I was looking at is this divergence, and this usually happens after I don't want to go into details, Elliott wave, after a fifth wave in gold, or a reversal signal in any contract or any time frame. So this is what I look for. I look at a break of, if this is a reversal bar, as we can tell, it made a new high and reversed, and this is a reversal exhaustion kind of bar, and the moment the low of this bar is taken out together with the divergence in CCI, it triggers a very strong reversal. Now you don't have to take the first bar obviously to catch the top. You want to wait for confirmation, and a break below that trend line on a CCI, which happened when we took out the low of this bar, which was August 11th. As you can see, the market really sold off with very high volume. This is a thick red bar. That means it had a much higher volume. As you can tell here, we had over around 590,000 contracts, and the initial target was reached at 1875. I'm not going to talk about target, but that was a 50% pullback of the entire move from June 6th. So usually this is the normal 50% pullback is what I usually aim for after a reversal, 38 to 50%. Having said that, I'm sure a lot of people missed that, and so what do we do next? So the market usually after the 50% pullback is gonna bounce, and the market bounced up, and I usually look for 50%, but more important is the 62 to 78% area. So I would start looking for reversal signals of that zone on a smaller time frame and time frame charts to catch a pattern within that daily chart for better risk management and entries for grabbing this opportunity. So what I'm expecting here is an ABC move down. So I'm expecting an ABC and a minimum drop to 1891 in that case area. Obviously we might not reach it, or we might continue and drop to 1809 if we take out the 1874. At this point I will talk about the next signal, but at this point we'll wait and see how you play that setup. So if you miss the initial drop and you're looking to short the market for a retest, this is the breakdown zone, which usually becomes a resistance. So this is the support, and this is the low bar 2020. That's when sellers came in at 2020 bar low or daily low. That was August 11th. I expect a retest of that area where the market broke down and where sellers came in, and that happens to be where the market reversed on August 19th. And this is when I tweeted on my account. I said resistance 2025, possible pullback reversal from this zone, daily momentum still up, refers a signal triggered. I'm going to go through that reversal signal as well. So as I was watching this area, the zone of 2008, which I had previously mentioned as well, that we might get a bounce once we take out this high. I will post all the links of my tweets in the video, where I said we might be heading to 2008 before we reverse back down for an ABC correction. So while I was watching that area, and this is the same area on 120 tick chart, 120 minute chart. This is the 224 high that I was watching in this zone for a possible reversal, because the 220 is where it broke down. This is 70% pullback, and this is a high probability reversal area. So how do you manage this on a smaller? I mean, the gold has been very volatile and it's extreme. So volatility, it's very hard to trade on a bigger time frames and holding for big moves. But you always try to find a way to manage that, whether with ETFs or trading micros or whatever suits your account size and risk appetite. So having this is the area I was watching, and another same thing on 120 minute chart. This is the pullback, and this is where I was looking for, anticipating possible another divergence on CCI in this area. So this is exactly the same setup that happened on a daily chart a week before on a daily chart, which is this bar with a divergence here. That's happening again on 120 minute chart on a pullback in a major resistance with a high probability reversal zone with a possible ABC. So, and this is where it triggered again, and this is where I would wait for the market to break below this area. So the moment the market took the low of 2012, you could have entered 2011, 2020 with a stop above 2024.6, so it's 2025. With these extreme volatile conditions, market might have went up and took some stops above this, but again, this is a setup. We don't know what's going to happen. We just accept things as they are, and we take this setup as it is. The market sold off sharply, as you can see. It went down over $30, $15, $25, $30 from the low of this bar. Went back up, couldn't continue higher, and it sold off again. So if you had placed a stop above this area, you would have caught this move lower. This was a tricky area, obviously. When the market bounced back up, a lot of traders would have scalped out, took some profits here, and didn't re-enter here. Well, this is a personal choice how you trade it, but these setups are very valid and high probability. Usually after this signal, divergence signal, you get a rejection of the zero line, then a failure for a continuation ABC move down. So having said that, this is exactly what happened. We broke here, we got a zero line up on a CCI, and then we broke down. And this is identical fractals happening on a daily chart, and on the same thing happening on 120 minute chart a week later, for fine-tuning your entry and taking that pullback in gold. So as I also I mentioned that we're looking for a target. I was looking for a target of 1938. I will post these charts and links. So we dropped to 1928, where I came with a 1938 zone. Yeah, sorry. And how I came with the 1838 zone was this swing low, 1939, 1938 area. where I was looking for a support in this area for initial move before continuation lower. This is just my thoughts on this setup. I will post some links to the charts where I explain that and anticipating that move. And this is the reason you wait for a high probability area. This is where you don't want to chase it. You could have gone long at 50% here, obviously, and took some scalp profits up. But after this divergence on a daily chart, this is only a scalp move up due to the high volatility and big range in gold the past couple of weeks. There's a big opportunities in here, but again, this is a very high probability with high volume trend reversal, which is, I would rather be short this up move than going long if you're not scalping and watching smaller time frames just to take smaller moves and smaller swings. So I hope this feel free to ask any questions. I hope this explains how I come up with my thoughts and the context of my setups in terms of longer term swing trading other than the intraday trades I take. So let's see tomorrow. Some buying came in into the close on Friday, so this is looks like some buyers came in here. We might stay in a sideways range before dropping to 1891, and you never know, we might just gap down and continue lower. This is not a high probability entry anymore. If you are short, you just trail your stops above prior day's highs. For example, here you can trail it above Thursday or Friday's daily high, or you can zoom in and just use other swing areas to trail your stops and tighten your profits in that case. If you're looking for a much bigger move, you can just put a stop above the initial entry zone and wait for the market to correct before continuing lower, if it's gonna go lower. Just an assumption. The initial entry and the risk management with a high risk, low risk, high reward entry, a very good area was entering around 220 here on this pullback for around $100 move lower with a $10 stop. This is 1 to 10 or 1 to 9, whatever you want to calculate it, depending where you entered. This is the higher probability entry in that case. I hope this was helpful and give you just some idea on how I look at markets. Enjoy the rest of your weekend and have a great week next week trading. Take care all. See you.